Go ahead, Sayantan.
Yeah, hello everyone, good afternoon. I'm Sayantan Chakraborty. I work for JP Morgan. I'm based in the New York metropolitan area. I have a global product responsibility within the bank, and a big part of the payments business, obviously, making sure that payments happen accurately and they go from the right sender to the right receiver is a very important objective that we all share. So,
Thank you, Sayantan. Hi, I'm Prashant, Shah. I look after the financial institutions business for South Asia for Standard Chartered Bank. We look after clientele which includes banks, institutions, insurance, real money funds, sponsors, a wide gamut of financial institution clients, and we help them do business. For say Indian clients wanting to do business globally, global clients wanting to do business in India is what we facilitate.
Thank you. Glad to be here. Thanks for having me, guys. My name is Mayank, and I'm the founder and CEO of moneyHOP. We're building infrastructure for cross-border payments from India to the world with a specific focus on education and tourism, but since eventually into trade, remittances, pertaining to MSMEs and exports. We facilitate close to $200 million worth of remittances every year, and going from strength to strength. I think today's topic is an extremely important and appropriately, time-wise quite appropriate, because we, as a global ecosystem of financial institutions, suffer about $500 billion worth of loss through frauds, and there's about $3 trillion worth of illicit payments that go across borders pertaining to human trafficking and drug trafficking and terrorist financing. So the advent of AI is kind of a boon in that respect, and the usage of that to be able to detect and prevent fraud is extremely important for all of us financial institutions. Glad to be here and looking forward to having a conversation with my fellow panelists.
Hi, I'm Nitin Motwani. I'm co-founder and CTO of BookMyForex. We are basically a platform which facilitates cross-border remittances as well as cross-border in-person payments.
64
which can be done using our co-branded forex cards or using currency notes that we sell. We're actually part of the MoTwani group of companies, and we've been in this business for quite some time now, with a large portfolio of over 500 crores of I think this is going to be an interesting conversation. I'm looking forward to it.
Let's get started. I think my first question to you. Let's just speak about what are some of the examples, given the exponential rise in payments, what are the types of fraud that you end up seeing? And is it just transaction fraud, or are you looking at different kinds of fraud?
No, that's a great question. And if you really truly think about this, right, we're seeing more and more people travel abroad for education or for tourism. We're seeing increasing number of MSMEs nationally, and all of this they want real-time, instant payments. I think the combination of all of this is a good precursor for increased fraud, but also sophisticated. Right? So it's very important for all of us to be cognizant of these frauds and try to take appropriate action to prevent them. For example, some of the most common frauds that we've seen is the card not present fraud, where purchase is made using a stolen card, right? Or you might have an identity theft, whereby people use sophisticated mechanisms to steal your identity, or for that matter, synthesize an identity using a combination of real data and fake data, create an account and siphon money through that. We've also seen lots of really clever people use social engineering and human psychology to be able to do something called account takeover, right? Whereby the individual is able to take over the account and kind of make transactions for that. And I'm sure all of us have seen the Netflix series Jamtara, and you have to really give it to the ingenuity of these individuals who understand the psychology so well that even though we are sitting on the dais and we're talking about They have mechanisms to be able to, enable us to share our credentials with them. And on the cross-border side, two specific kind of frauds that typically take place is, when an e-commerce transaction happens across border, the money is moved, but the service or the product is not rendered, and very quickly that money is siphoned into a different account. And what increasingly we are seeing a little bit more sophistication of the mule accounts, whereby, especially in developing countries such as India, unwitting people are given a small amount of money to use their identity to create an account, move money into that, and then kind of take it from there. And in the cross-border space, I think the three layers that we talk about, which is basement and layering and integration, becomes even more difficult to detect. So I think we have to be cognizant of this and perhaps use AI to get it working.
I think RBI is also keeping a watch on AI for these kind of use cases, mule accounts in particular. But Nitin, to you then, what is the innovation that we've seen so far to track some of these cases and overall fraud in general? And we'll come to AI maybe a little later. But what has happened so far?
So specifically, if I was to talk about the innovation that we have done, particularly within BookMyForex, I can talk about first of all a few anecdotes of such stuff that's actually happened with us. There was recently a case where a bunch of individuals took like foreign currency cards from us, which was loaded with a very small amount of UAE, and they all went to Dubai, and pretty much we loaded the card while they were abroad, and with large amounts, small amounts, and they drew cash in bulk from ATMs across in Dubai, and in fact the situation was so bad that there was no money in Dubai. All the ATMs were empty. That's how bad the fraud was. And it wasn't done only using our cards, it was actually like a very well orchestrated scheme that was done using multiple PDs, banks, ATMs, and our cards as well. So this was quite an eye-opener, I think. And so we did specifically for in this scenario, what we have actually now built is, so we try to see a bunch of things. Look at the transaction history. Try to actually map out like the appropriate kind of transaction behavior or that we actually use. We haven't built our own AI models, but we are using third-party AI models to create like basically what would be considered a standard way of using a card when you're abroad. And then of course this model then helps us find anomalies to what would be the standard way of using cards. So for example, if the transactions are not like they're all happening in the same pattern code, or they're happening in a way where funds are loaded and they're amount is loaded instantly or instantly, especially in ATMs or things like that, or in categories which are known to be sort of like dubious. So our system and then typically what will happen documents covered and then ask the customers for additional questions to see why that behavior happened in the first place, and then we would decide to either unlock it or not. So that's like one example, one anecdote I can give you. Apart from that, like other things that we've done is we've started to recently verify documents automatically using OCR and GenAI. And I think that has actually helped a lot in not only helping us to extract information and sort of reduce operational costs, but at the same time also detect anomalies there. So there's standard formats that a lot of these typical OTAs and large websites use for or standard formats which are used for visas which are visa documents which are used for. So we are able to find again small anomalies if somebody tries to forge these documents. So there are certain things that that change in their document signature if somebody tries to change that. So again, using AI as well as certain non-AI technologies, we are able to detect that. So I can speak about what we've done, and of course we have done in terms of innovation. That's where I discuss about what is
Thanks, Nitin. You spoke about the rules which have been set into your system, AI to detect identity kind of frauds. What do you say, Sayantan? Just to hear from you, what are banks generally looking at in terms of fraud? What are they tracking? And what are some of the tools that banks are using at their end, apart from Fintechs, to essentially detect these kind of frauds?
Absolutely. So, building upon what Nitin said as well, if we take a step back, what is the primary goal when we process payments? Primary goal is that money goes from the legitimate sender to the intended beneficiary in a timely manner and accurate manner. Right? That's a very simple mission, but there are a lot of very important parts to that, right? So, which is legitimate sender, the intended beneficiary, timely and accurate. And errors or fraud or any other kind of anomaly can happen in each of those four elements. And especially when we look at it from a cross-border perspective, where different countries have different payment rules, we require different amounts of information to successfully process the payment. And then again, the processing time might vary depending on what payment options and what payment networks are permissible for cross-border payments in each of the markets. So when you kind of aggregate all of that, there is a fair amount of complexity that comes into the ecosystem. And when we layer the increasing customer expectation that all of these payments should happen relatively quickly, right, near real time, relatively quickly, in minutes, in seconds, then the time available to actually look through all of those elements and make sure that all of those four things are satisfied, plus all the other obligations that we have in terms of making sure that the money is being sent for a legitimate purpose, a valid purpose, it's permissible under the local laws, all of that stuff. So in that broader backdrop, I think any service provider has to look at a broad range of tools. Right, so starting from some of the pattern stuff that Nitin talked about, looking at usual behavioral patterns, looking at accuracy of payment data, and in that context, I think of machines as really aiding the human ability. So at the end of the day, there is a human ability to detect patterns, take action based on that, locate exceptions, and then handle exceptions, and hence prevent errors and fraud. And machine, any kind of machine, allows us to augment that ability by being able to look at large amounts of data relatively quickly, which, when we are trying to do things fast, is often difficult for a human to do on their own. So I think in that context, looking at rules, how we set patterns, with again the goal of making sure that accurate payments, appropriate payments happen smoothly, and we don't have too many legitimate payments getting stopped, so that we don't create bad user experience, bad customer experience. At the same time, having enough due diligence, having enough level of scrutiny, using these rules, using these tools, so that we can identify exceptions and manage through those. I think that's sort of where the focus is, and I think as I said, it's a combination of tools. It could be something as simple as if a particular country has a good set of account validation tools, for example, you can go and actually verify who owns this account, is this a legitimate account belonging to the sender and the receiver. I think even something as basic as that, and then you layer on more and more pattern-based tools, machine learning and all of that. So it's really, as I said, it's a combination of tools, not necessarily just one and done kind of approach. And love to hear from others.
Sure. Prashant, wanted to hear from you. It feels like the fraudsters are innovating faster than the ecosystem. So, and we've had fraud tools existing for a long time now, right? And we've been putting in rules after rules in similar fraud systems. Who do you think is winning, and are these evolving at all, the fraud systems?
Thank you, Geetika. Our fraud detection model is evolving. Of course, and I believe the pace will only keep increasing because you are finding fraudsters are getting increasingly smarter and sophisticated. So while we've taken a quantum leap from the days of, say, offline, manual, post-transaction fraud monitoring, we will continue to evolve because what we also have to realize is the fraud threat vectors are also getting increasingly sophisticated. You're dealing with national state players, you're dealing with organized criminals, cyber terrorists, and with advancement of technology, it also means that fraud attacks are now occurring with greater velocity, speed, accuracy, and effectiveness. So they will have to continue to evolve. And now look at the banks, all large institutions. In spite of all the investments that we've made into tech or upgrading the tech, we all have issues of legacy. The solutions and the systems are so fragmented. You don't have a monolithic system or solution that can take care of the entire process in a payment flow. Different forms of payment flows have different systems which often don't talk to each other. So we will need to keep evolving till you find that one-stop solution, connect all the dots. And that's work in progress and will continue. Now, like you said, fraudsters, I think they incentivize. Maybe like it was mentioned, they are smarter people than us sitting here, and they don't have to worry about limitation of legacy systems, right? I mean, they have the latest technology to deal with. It's easier for them to run trial and error models and then scale up. Cyber world offers wide market with deep anonymity, and of course they are putting AI to good use as well, right? So a lot of they are automating a part of the attack. They're developing new technology. So you have text to voice, conversion using bots and old calling scams. Generative AI is used to create extremely reliable and believable lures, which gets unsuspecting customers to click on scam content. So you have a CFO and CEO getting impersonated by voice or email, forcing their own employees to initiate cross-border payments. That's happening. But are banks fighting? I think we are. We are investing in tools, and just to add what Sayantan mentioned, there are behavioral patterns and models now that are put into place, where we could identify in our digital channel whether to distinguish human versus a bot. No longer are you tracking whether the input device or only the input device. You are also tracking or able to track whether the speed at which the input is happening is consistent with the pattern that was used for that device. Our 2 fingers or typing is happening with 1 finger instead of 2 fingers, which is the pattern. So all those tools are coming into play, which are helping us. Biometrics verification is extended to liveness tests, right, where you could ensure or figure out if you're not dealing with recording or replay attacks. AI has made significant progress in identification of documentary frauds or modification, which is very, very important in cross-border trade fraud detection. And finally, data consortium. Large banks are now getting together to share data, good and bad, within the premise or boundaries of customer privacy. And this is helping us to generate models at industrial scale. And enables better fraud surveillance. I think reduces customer friction as well, and perhaps allows us to implement it in a bit cheaper way. So, for example, you have MAS in Singapore, which is running a project where multiple banks are involved to develop, a prevention software which can, help customers right at inception to identify a fraud. So you will have those interventions coming in as well.
One of the elements also is looking at the type of payments, right? So, we talk about the range of tools, the kind of tools we would use for pure person-to-person or consumer-to-consumer payment, and the data that is available is different than a business-to-business payment. So, there's I think also a range of the types of fraud attempts that happen, and then the tools then that are applied, and will keep evolving, to Prashant's point, to really become more and more targeted.
But the fraudsters are smarter. So virtually things like उनको पकड़ना मुश्किल ही नहीं ना But yeah, we
will
will get
use that as the takeaway for the session. But I think we touched upon Gen AI, and I think some of our analysis shows 20% of all the Gen AI use cases that are being tested today are in the area of fraud detection and monitoring. So I think that's going to be an interesting one to look out for. But on that note, the equally important topic of how are the risks of AI being tackled as well. So let's look into that now. Mayank, over to you. Is there a real risk of false positives? Is customer experience being hindered because of all the innovation that we are doing on the detection front?
That's a good question. I mean, I think any technology has its goods and bads, right? And if we really think about the players in the ecosystem that we're talking about, we have individuals or businesses, as the panelist mentioned, we want to receive payments or send payments at a faster speed and a lower cost. We have financial institutions like ourselves facilitating those services for a profit. And then we have regulators who essentially want to maintain the stability of the ecosystem. Right? And though we want a higher speed and lower cost transfers, and perhaps AI is the right tool for us to be able to do so by prevention and detection of fraud, it also comes with its own issues. Right? Two primary models that are used in AI is a black box model or a white box model. Black box model, as the name suggests, doesn't have a very high transparency of how the output is produced. It uses deep neural networks. Accuracy can be higher, but explainability is less. On the other side, the white box models, we see linear regressions, we see decision trees, and other bits and pieces that are used. And again, accuracy is not as high as the black box model, but the explainability is high. So certainly when we are looking at exploring usage of AI models when it comes to financial services, the white box model, though the accuracy is lower, seems to be a better based model to use, because if a regulator comes knocking on the door, we can't necessarily point our fingers and say, well, AI asked me to do so. Okay? And think about a scenario where due to the biases which might be created, essentially any model, forget about just AI, right? I mean, it's garbage in, garbage out. It's what inputs are being presented in sample it's going to write the out of sample output, right? So if there is any gender bias, if there is any religious bias, any sort of biases which are present in the inputs, that's going to reflect in the output. And over time, because there's a feedback mechanism, those biases are going to keep getting stronger and stronger, right? So there's a concept called hallucination in the AI model, right? And it's more prevalent in the large language models such as GPT and others, whereby either an output which is produced is completely fabricated, or there is inconsistency in it, but the model is telling you so with a high degree of probability. Right. So what tends to happen in these cases is, for example, there's a logical fraud whereby with a high degree of probability, GPT is telling you two contradictory statements in the same paragraph, or it's presenting a historical fact which is outright lying. So for us to be cognizant of these things is extremely important, and it's very important for us to have audits, have explainability, legality around it. So a framework around which these models are used is extremely important. I think Europe has done some work in terms of coming together and forming regulations under which the AI models can be used. And I think those, and even at a smaller scale, I think every organization which is using it needs to have framework and risk management checks in place as to how it's being used, and constantly audit those exams.
Sure. I think very real risk of hallucinations which you brought out. Nitin, Fintechs, how are they dealing with the cost overhead of all of this? There is a very real cost to all of these tools, right? How are Fintechs being able to deal with it?
So let's say even if the use case is as simple as just using some existing tools, right? Using existing models and all, costs are still reasonable, I would say. And it really comes down to what you're trying to do. I think if you start talking about like building customize models, fine-tune models, going in that direction, then I think we're talking something which may get pretty good from a cost perspective as far as fintechs and small companies. But I mean, I think using AI models, using different algorithms, that is something that is part and parcel of every, and has to be part of the tech roadmap of every company, regardless of what size. So it's just a matter then of having the right amount of data. I think that's the primary issue that I see smaller companies, smaller fintechs maybe struggling with, is that they don't have enough data to figure out what is the right kind of behavior to actually be able to detect anomalies without having to make false positives. So it's not so much, I would say, the cost is not really that big of an issue. Amenities, let's face it, the models that are out there right now for a small fintech or even for a mid-sized fintech to go out there and try to build something of that level is quite hard to do. But to use those models, I would say.
Add to that, right? I think it's like what we say if you're trying to build a card solution, the first thing you don't do is build a switch. I mean, at the right level, fine, you might want to do that, but at this instance, I think that there are several companies, be it AWS or ChatGPT or IBM, and I think they have taken the lead of kind of building these models and running hundreds of billions of lines of data through it for you to train the model. So you don't necessarily have to go out and write a model to train it. But as Nitin correctly pointed out, being able to use those models in your day-to-day, not just from the AI standpoint, but also productivity standpoint. Right? For example, I was away for 2 weeks, I came back and I told the AI model to say, summarize all my emails and bring about the most important ones. I think those kind of things, right? Nitin spoke about OCR. The next bit of OCR kind of works well when there is a structured way in which identity is being presented. Like in this part of the world in India, I mean, even if you just take an Aadhaar has different form factors, right? My father has this big Aadhaar, I have the small one. So how do you really, use, see, traditionally the models were written if A, then B, right? So it's very logical, mapping that's happening. AI takes it to the next level and says, if A is equals to B is the only thing that has been fed, does C equal D, right? And it's able to take that lead with a high degree of probability. So feeding various kinds of, arguments like images to AI and extracting information and triangulating that to establish the identity of an individual and things like that. So we don't necessarily have to build models, is the point that I think both Nitin and I am trying to make, but necessarily consume the right models to be able to innovate in your workflows.
And basically, it's becoming a must for all companies, fintechs or banks, to have these models in place, irrespective of whether the cost is big enough or not. And while you may not need to write the models yourself, you may want to consume some. But you're saying the cost is not at the moment very prohibitive.
No, I don't think so. I think it's like consuming any API service. You're paying for per API consumption. So certainly not. You just need to have sufficient data to train the AI model for the kind of outputs that you get.
Sayantan, coming to regulations. Cross-border regulations themselves are complex. And then AI, of course, we are discussing a whole lot about how regulations in Europe, etc., are evolving over time. But how are you seeing overall banks react to the fast-changing nature of a lot of these regulations?
So, if we think about the life cycle of single payment transaction, so while that payment is being processed over a few seconds, minutes, or hours, typically there are a few things that need to be done, especially when we apply in the context of cross-border payments. So first, we have to make sure that the payment instruction is complete, right? Depending on where the money is coming from, where it is going, there are requirements on what data elements are required to actually process the payment. And it could be different, right? Somewhere you just need an account number and a name and amount, and in other countries you need like a purpose of payment. And so the first is you have to verify it's complete. Second, you have to verify it's active. Then you have to do sanctions. make sure that you are checking against sanctions lists that are applicable in the context of the thing. Then obviously fraud is another element. Then there are operational challenges of things like, hey, is it a duplicate payment? Was it really somebody sending 5 payments of $100 each? Did that person really intend to send 5 payments, or did they mistakenly? So all of these different anomaly checks need to happen while the payment is being processed within less than seconds, minutes, or hours, and increasingly closer to minutes and seconds. So I think in that context, the data that is available to whoever is the service provider, obviously the data that is available to a consumer app, somebody who's actually offering end user services to consumers, is slightly different than a bank which is offering their payment processing services at a wholesale level. So again, based on the data, and then depending on jurisdiction where the payment is coming from, where it is going, I think the point that Mayank made, which is really creating governance structures around that. Is the data appropriate? Can it be used for the purpose that the service provider is considering building models on or building rules on? And then often what I find personally is actually starting with like a pilot or a small use case is very beneficial, because that allows, especially for those who are starting this and who are getting into enabling APIs and stuff, it's actually good to start with something small. It allows the teams within the organization to build expertise and start thinking about all of these different implications of data, all of the stuff that my co-panelists have talked about. And then based on that, as the organization develops more muscle memory around this, then whether it's open capabilities from the market, whether you build your own, all of those questions then become easier in some ways to answer. And that's how even larger institutions are probably going to get this.
What comes to mind, Geetika, is it really depends on what level of sophistication the country is able to achieve, right? So I'll just give you an example. When Bangladesh went through the recent crisis and curfew was imposed, the biggest worry that the banks had there is, will our US dollar accounts get hacked? There was a great Bangladesh rise that had happened. They said just block accounts. We almost clear about 50 to 60% of the overall country's volumes. And there was panic. I mean, the only thing that they were interested in is security of their staff and security of the money in US. Right? So that's the level of fear psychosis that can play, and it depends on, what level of sophistication the country is also achieving.
Good insights, thank you very much. I think just ending this topic around risks and regulations, Prashant, do you think CBDC could be an answer to some of this fraud discussion that we have?
Honestly, the level of interest that CBDC has globally is unprecedented. But these are really, really early days, very nascent. So whether it adds to a new element of fraud, maybe we'll see how it progresses. But given the technology is taking shape, I think this is the time where if we could secure the ecosystem, right at inception, ingrain that the security of the ecosystem has to be managed, I think that would be a real game changer. Can we make it a closed loop system where only trusted beneficiaries or participants can work in? Unregistered entities will find it difficult to take a leap into the CBDC system. Can we make entry barriers difficult to come in? Would be great way to protect the system from frauds. Blockchain architecture using distributed ledger has the ability to record securely and transparently the transactions, which enables visibility when required when things go wrong. And that's something that the criminals don't like, right? They thrive on anonymity. So again, can we make it? So absolutely, if CBDC comes about in a right way, it could be a game changer in terms of fighting fraud or even other forms of financial risks. But we'll have to see how it evolves as more and more banks and central banks adopt this and roll it out. But yes, it could revolutionize the financial systems or financial framework because it can provide you a digital currency that is secure, transparent, yeah, and that's what you want.
I think, Geetika, I would completely agree with him, right? I think if you really think about the reasons, and I think Sanjay was pointing out that the more the number of intermediaries that are there, the higher the probability of hacks and data leakage and hence fraudulent activities happening. And of course, if you're trying to break down the cost and decrease the latency as well, if we think about a framework like CBDCs and there's a full fungibility of CBDCs across currencies, the intermediaries get dropped. The points or events at which the hack can happen reduces, the cost goes down. And also CBDCs under the DLT framework has the ability for you to earmark the payment. To say that, well, if it's a university payment, I can't go buy alcohol with an argument or anything else, right? So even if the hack happens, it has the ability, electronic logs to be used in the right manner. So I really think yeah, that could be the answer. I mean, UPI is obviously doing tremendous work with PayNow and whatnot in terms of integration of real-time payments, and then if you overlay that with CBDCs, I think we're looking at something really great.
Thank you. I think we're nearing the top of the hour now, so just closing remarks, Nitin. What do you think will be the UPI moment in fraud that we will see, where there will be like a giant leap where we take in detection of all kinds of fraud? What is that one game-changing point that you think will happen?
Well, I think a few things can possibly contribute to that. One would be, as we start getting closer and closer to AGI, GPT-5 coming in, and I don't know how GPT-5 will shape up, but maybe with AGI coming in, I think that will be a big step towards using AI specifically then you have the ability for the model to actually this guy was for the transaction and this was for the transaction, this was a sample of the transaction. So then you can see how users, compare fraudulent users with the users and reason itself instead of having that sort of reasoning being done manually by human, which is sort of the process right now. Right, but it's also like enhancements in AI. I think are also to that extent because the better AI gets at detecting fraud, the better it also gets at creating fraud. So what you'll see is much better deepfakes, much better voice impersonations happening, all that type of stuff happening. So it'll be interesting to see how this entire thing shapes up, but I think, once Asia comes out, it'll be pretty good.
Yeah, I think if I was to kind of comment on two things which I think, or rather I hope will happen is, I think, Prashant pointed to it. One is that if these large institutions such as JP Morgan and Standard Chartered and Amazon and Google will kind of come together and create a database of fraudulent transactions that are happening or any suspicious activity that's detected. That ecosystem players can then start pinging into an API and doing real-time checks. And even if they don't use that data to prevent a transaction, they can at least flag a transaction to say that there's some suspicious activity around it. So the guys in the value chain are able to use it appropriately to prevent fraud. The other thing I think that's really going to happen is that I think with the likes of NVIDIA really creating those chips which are this powerful, what we'll see is that people will start using AI, using this quantum computing and be able to real-time crunch data to detect with a high degree of probability X ante, not X post facto, and implement that in real time to be able to prevent fraud before it actually happens. I think these are the two things which I'm really excited, which hopefully should come to us.
To add to that, I think the point about data consortiums, I think a lot of this stuff should actually be happening at the network level. I see Swift, for example, taking a lot of these initiatives to add AI level fraud checks at their end. Similarly, Visa, VRM, Mastercard, and all the other networks, they're building out a lot of GenAI-based systems to track fraud. So definitely a lot of stuff can actually be handled. That's the best place to do it because that's where most of the data is.
I completely agree with what Nitin mentioned earlier. Detection will get difficult, and I was very interested in one of the programs that we were trying to implement is in our digital channel. If we could get a bot, to an AI bot to kind of assist the customer when he is initiating a transaction, telling him this is a high-risk country, have you looked at it? This product or commodity could be high risk, have you checked the price? Something like that, if you could try and do, would be a great help, especially for not so savvy people. And I do think, like we discussed, CBDC or security of the ecosystem is going to be important. Let's push for outright avoidance, not detection.
Yeah, without repeating everything that has already been said, I think for me it's really what can we do at an industry level. I think is really going to be important because individually each institution will obviously keep fighting their battle against fraud and other anomalous payments, but I think at an industry level what can we do? How can we standardize these? Because the simpler things are, it's actually easier to keep it secure. I think part of why some of these fraud happens and other kind of attacks happen is partly because others are able to take advantage of the complexity. So I think part of the simplification is important.
In fact, one last point is when organizations will get together, I think regulators and governments will also have to get together, right? I mean, we have data localization in India. How much can we share of that is a problem. And that's true for all other countries. So it's very important for regulators also to get together and see if we can form this data consortium cooperate.
Sure, perfect. So I think the key takeaways for you all essentially should be that it needs to be tackled at an industry level. Models are evolving, but so are fraudsters. Networks, regulators, large consortiums need to come together to tackle fraud in general. Thank you, everyone.
We do have the time to take a few questions. So if you have questions, please put your hand up and we'll send across a mic to you. We have one gentleman at the back.
Hello everyone, very informative session. Thank you for your time guys. Just a couple of things I want to share and ask, to be honest. One, using GenAI as a transactional monitoring system for fraud detection seems to actually put, and there's a probability of it hindering the process, considering the fact that GenAI itself takes time to generate a response. Having said that, even the cost aspect that you guys mentioned about that it's not going to be a factor, I would like to differ, considering the volume of each transaction and the number of tokens each transaction will generate from an input and output perspective is going to cause a big hole in our pockets. Having said that, coming back to what Mr. Mayank said, I think I completely agree to a point that using white box methods makes a lot of sense to have, to detect fraud at a transactional level at the time of transaction, not after, not prior, because that's when you can actually track it. Having said that, my question to the group is, what's that ideal accuracy rate? Because I have built these fraud detection systems in my past life, but having said that, what is that one number? Is it 75%? Is it 90%? What is an ideal number of saying this percentage of true positives is something that we can, we can go with at least with it?
I think that's a very subjective question, and every organization will have a risk appetite of their own. And I think rather than with every model, you got to start somewhere and keep inputting it till the time the accuracy improves, as you might already know, right? So I think I might say 95% is okay. Given the volume that these guys process, they probably are looking at 99.9. So I think more than anything, I think the capital at risk is got to be looked at. Right? What is the value at risk you're comfortable with? And then back drive the percentage that you're happy with. That's what I would say. And to the point you're making about the generative, you've got to start somewhere, right? I mean, fair enough if it's taking a little bit more time right now, but if you don't start somewhere, you don't get anywhere. So maybe right now, as with most technology in corporation, it's taking a little bit of time, but is it better than what we currently do? 100%, right? And can it further get better? I would think so. So I think it's a stepwise iterative process that we'll have to go through to get to that ideal state and constantly keep improving on it.
So it also, depends on, given we are a global organization, we do not have one size fits all. So for a FATF high-risk country, you will have to put in some more parameters than a low-risk country, right? So there are various parameters that go into it. Very, very difficult to give you that one number. And if you get an answer, please let us know.
So I would request you to kindly take the questions now in the networking session, and please give all of our panelists, our moderator, a huge round of applause for such an informative and engaging session. Would you want to add to your closing notes? Perfect. I would request all of our panelists to kindly come forward for a group photo.